And a very good morning to you, and welcome to the pre-market rundown for July 9th, 2021. I'm Andrew Horowitz, and I am the co-founder of TriggerCharts. And here we are. Thanks for putting up with our postponement last week. It was kind of into the holiday weekend, a lot going on, couldn't make it. So we'll try to double up and be that much more interesting this week. Hope you all had a really great 4th of July. Hope you all spent a good amount of time resting and relaxing. It's important to spend a little time kind of reflecting and studying and stepping back a little bit. And a lot of times what I like to do when I'm looking at the charts and when I look at the indicators and I kind of get a feel for the market, one of the things that I do is step back. What I mean by that is I change up my time frames. I look at different levels of interest on, instead of, let's say, 30 or 60 minute, well, maybe I go out to a 240 minute, or maybe I even move out into something like a daily or weekly, sometimes even monthly. It gives you that additional level of perspective by stepping back and seeing what the big trend is. Because if you just focus in on a minute chart, it's very difficult to discern sometimes what the bigger trend is, because you can't capture that much unless you have maybe a 10-foot screen in front of you of what the long-term history was, and it gives you, unfortunately, only a snippet of the information. So I like to kind of pull back sometimes and look at that. Just kind of something that I want you to think about today as we talk about things. Because what we do often is look at the daily charts, and remember something, I use the daily charts as a default, not because that's what you want to trade necessarily, but the information that we glean from a daily chart and the way the indicators work are the same for any time frame that you look at, whether it's a 30-minute or 90-minute, or even if you look at a 5-minute chart. The information, how you look at it, how you decipher it, how you interpret it, is all the same. So it's really important, I think, to focus in on that fact. Before we go any further, I'll mention that what you're seeing on your screen right now is an important disclosure, of course, that investing involves substantial risk. Past performance is not a guarantee of future results, and a loss of original capital can occur. That's really important. This is deemed as educational material, and I want to make sure that you understand all of that before we go forward. I also want to make sure that you know that we have this being recorded. You can go to the YouTube channel for TriggerCharts, or you can go to TriggerCharts.com. These will be recorded so you can see these over and over and over if you like, each and every week. Plus, there is a ton of information and instruction, as well as a good amount of tutorials that are on the site. Finally, a couple of things. You can, of course, get all of these on the TradeStation Trading App Store. There's a 10-day free trial for any of the indicators that we talk about inside of here. We talk about the Commander Series quite often, the aileron, the key reversal indicator. Also, if anybody does, in fact, and when you do, I shouldn't say anybody, but when you do, because you will actually subscribe, there is an advanced coaching series that is available. It's usually $199. If, in fact, you go and subscribe, you're paying customer, well, we will give you this for free. So just email us at support@triggercharts.com. Last thing, and then I'm going to go over all the things that we always do, is if you have any stocks that you want to talk about, or any indices, maybe a currency or a symbol, put it into the chat and we will get to it. Updating where we are today after a weird day yesterday when we saw bond yields hit 1.25%. We're seeing that they're ticking up a little bit, and that's obviously good for, the reflex trade is yields up, industrials up, materials up, financials up, energy up, and technology down, which is kind of what's happening today. Oddly, yields got too, I think, low maybe for a moment. There was a scare about what's going on with regard to a slowdown in the economy on a global scale due to the fact that we're seeing a resurgence of these lockdowns again. I mean, Japan's talking about a lockdown. Now no spectators at the Olympics. Australia's locking down. Some places in Europe are considering lockdowns. And if you look down the list in South America, it's just an absolute mess what's going on down there. But the theme this week that we have to look at, what is it? Well, just keep buying. Because even though we saw that the markets were down pretty healthy, by healthy numbers in the morning, they came back. And interestingly enough, what moved yesterday was rather substantial and surprising to a degree, because it was some of the SPACs, some of the the more aggressive and the more, I would say, loosely traded positions that made enormous comebacks yesterday. And when you look at something like that, you have to realize that risk is still tolerated. That it's not just buy the dip. That's not what it is. But when you see that the most aggressive positions, the most thinly traded, are starting to really revive back during the day yesterday, you have to recognize that something is going on there of importance, and that they just don't want to keep the market down, that there's a lot of money coming in, and they're trying to pick up anywhere that's seeing a bit of a move to the opposite side. You're seeing that today. Now, listen, the NASDAQ is down today, and the Dow is up substantially, and the small caps are up enormously today. The IWM, if you look at that index, you'll notice that is up pretty significantly this morning in the pre-market. And again, it's the more aggressive. It's the play that, listen, maybe some of this stuff got, I don't know, overdone. Let's take a look at our KRI indicator and see what. Oh, no, we don't want to do that. Go away. There we go. There we are. KRI, what? It was overdone here to the upside. This is the key reversal indicator. And markets are now near equilibrium, kind of blowing off some of that steam over the last few days that we saw. We saw these levels where we have these clusters form. I always put these points of cluster formations. We have these cluster formations, and then we saw it keep on moving up, and then this one-day wonder down. Kind of like what we saw here. A little bit of here. We get this quick roll, quick rolls. Again, it looks more like this one-day wonder than a pop back up. That's what you're going to see today. Look just like this, where we saw that there was some cluster formations and would drop. Here we had 2 or 3 days and then just pop right back up. I mean, we are in a defined uptrend. There is no way that you can convince me otherwise, right? If anybody thinks that we are in a downtrend at this point, I mean, even if we go out even further, I mean, that is not a downtrend. You're going to see times when we hit a little bit of a speed bump right there. But until we all of a sudden change the direction, you can't convince me we're in a downtrend. I mean, yeah, these were short-term, intermediate downtrends. But the overall trend, that's what I said, step back. Let's look at this from a positioning going backwards. I mean, look at this line here. This is a pretty well-defined channel that we're looking at. Didn't draw that perfectly, but you know what I'm saying here. I think you get the point. So, correlations are now broken. Yields to stocks, to currencies. Everything's kind of, I think, just exhausted. It's exhausting watching what the Fed's doing, how much they're buying. I mean, we're still talking about $120 billion a month going into various credit positions, treasuries, and municipals and corporates in the U.S. It's just in the U.S. We're not talking about Japan. We're not talking about Europe. Not talking about any other countries around the world that are partaking in the same ridiculousness of believing that we can do this quantitative easing is going to boost growth, other than the fact that it's actually going to flush money into the system, which then kind of works on the whole aspect of the markets themselves, right? Building the wealth effect and creating extraordinary opportunities for inflating assets. But again, fundamentals are kind of, forgotten right now. Charts are the way to look at this right now. Since we're not able to invest on basic fundamentals because the fundamental and the correlations and the dip buying that's going on and the fact that nothing actually equates perfectly, you may have a few days of things like, hey, yields are up and look at that, things are going in that direction. They may break the next. I mean, what broke yesterday was pretty astonishing, where yields came down to 1.25%, leveled off about 1.3% on the 10-year yesterday. But you know what? That broke the markets a bit. And as such, when you look at what's going on here, you have to say, maybe all these correlations are not actually so tightly positioned right now. And again, the other thing is that correlations don't need to be necessarily minute by minute. It could be a weekly positioning, like where are we, a monthly, a longer term, to see where those correlations are. Bottom line is, yes, there is somewhat of a correlation to what we've seen, where bond yields up and we see technology and the NASDAQ generally down, for when we look at the big picture. And we can say the opposite when yields are up. Well, we see the financials and the banks do very well. I do believe we are kind of getting to a point that unless we go back towards what would consider to be a global or even a individual country recession, it's hard pressed for me to understand or even believe or even invest in a way that would bring my money into a lot lower of a bond yield position. Now, if I'm wrong, well, listen, I'll take that positioning and change it. But right now, it seems to me that we have a technical matter going on, even though the Fed is talking about inflation. The reality is that we have some inflation in the system. It's very clear from every aspect. I think yesterday was, again, I wrote this down, maybe too much of a good thing. Maybe yields came down too fast as the yield curve is flattening. Talking about the COVID, we have the Delta Plus variant, whatever that means. But again, they're talking about the pandemic trade again, but not really. Seems kind of far-fetched that we're going to start bidding up Peloton to the levels that it was in the past, and the stay-at-home stocks and the Wayfarers and all the names. In fact, yesterday when I looked, that was a early morning discussion that the pandemic trade is back on. Yeah, some of it is, where we saw tech over the last few weeks, but I'm hard-pressed again to believe that as well. It seems that we really got our fill of a lot of that, and the reopening trade and the back to normal, or let's just look at it differently. Just a normalized condition is here. Now, whether or not this Delta variant, I am not going to talk about it. I'll mention it to us because it's something we have to put on the shelf and kind of think about, is something to be concerned about for fully vaccinated people, and whether or not that is going to cause, I can't imagine we're going to see shutdowns here again unless something gets really out of control. I mean, really out of control. And I don't see that happening with half the population. Well, I don't know. Truth be known, it doesn't really matter. We just watch what's happening, watch how it plays out, invest accordingly. That is a major lesson right now. Let's not speculate and try to get ahead of something that's not there. Tech trade is definitely fire. No question about that. Earnings are upcoming in the next couple of weeks. We've got to watch that. Banks are lagging, yields dropping. I thought actually Bank of America was an interesting play yesterday to start picking up on a rebound after it dropped significantly. If you look to the right here, the screen to the right, what we're showing is the XLF, which is the S&P Select Financial Index, which is an ETF. But you look at this, we had about 38.5 on the top end here, right? And let's see that here, about 38.5. Yep, that was the top. And on this, saw some interesting levels down towards prior support around here. Not great support. I will tell you, it's a support that we could look at and say, interesting, but not great support, right? There was, down over here, there's better support, about 34.60. Potentially there is some way down here, but we did see this potential or this considerable rollover that was after this major move, right, from 33 to 38 in a pretty much a straight line up, a couple little, hiccups over here, but a straight line up, generally speaking, a little volatility. And then, we have to get a little bit of cooling off situation is what we had. Now, obviously, with rates that changed dramatically a couple of weeks back, we saw this drop down. This was highly correlated to the rate environment peaking out. We did peak out somewhere over here. Actually, we peaked out in March, April. Let's see if we can pull this up a little bit here. And then it kind of kept on holding at those decent levels. We saw the yield curve. We maintained a nice wide spread with the 210s. That was good for the financials. And then this rollover where it was like, that's enough. Let's kind of move back to tech. If you took this and you overlaid a technology indicator or maybe even the Qs, you'll see it's pretty much just opposite. So where were we here? Backdrop. Well, the backdrop right now, the consideration, the concern is that we have, a slower trading environment. Of course, it's summertime. Not as slow it used to be back in the day. Back in the day, there was a whole different situation that went on. Back in the day, people just took off. Well, now, if you take off, you still have your phone. You still have your availability of your Wi-Fi. If you don't have Wi-Fi, you have 5G or even 4G. You have total availability to be trading. Back in the day, you didn't have that as much. But here we are today. So volumes are a little bit slower in summertime. We are seeing those come down a little bit. Fed is very supportive, and it's still the best casino in the world, right? Let's be honest. Where else can you play all day right from your phone when the odds are kind of in your favor to a degree? as you see that there is, it's kind of like the casino saying, hey, you know what? Why don't you play craps and we're going to tilt the odds in your favor. It's kind of like the markets right now with the Fed saying, you know what? We're going to keep on pumping in liquidity. Stimulus, the word is out, a rumor that Biden struck a bipartisan deal on infrastructure. I don't know. That's still moving. It's problematic. There were some issues yesterday about some executive orders. Give with one hand, take it with the other. Economics, weaker again. Home sales, again. ISM manufacturing starting to cool, but it's still strong. It's really still looking pretty good. Fed minutes continue to be dovish. Initial claims were in line. Next week, CPI inflation, which is going to be important. PPI. Of course, the Fed says it's not that important, but it's, we look at this and want to see what's happening. They look at this PCE, which came out, which was right in line at 3.4%, I believe was the inflation rate, which is still very hot considering all things. The Beige Book, which is the Fed's way of looking at the various areas around the country and coming up with a consolidated view of what is happening and the growth and what is lagging. Import-export prices, Philly Fed retail sales, and UMich confidence for July is there. I mentioned about the 4-hour training course. We're going to talk about Didi. That was kind of interesting. There was a lot of real excitement about Didi. This is the equivalent. We'll just say it's the Uber of China, just to kind of make it simple. And then China pulled a fast one and said, you know what? We don't like what you're doing. And pulled them out of the trading app store, if you will, the app store on China, and said, you know what, you can't have this, sell this, download this. It's not available right now. Well, that's a big problem for growth. You need people downloading the app to utilize the app potentially. And then there's a question about, well, they're going to shut it down even further due to some of the question about how they were handling user data. So that's something to consider, that you have this problem with China, in my opinion, looking to do just a simple money grab here. That's all it was. It was a money grab. And they were looking to grab Didi right after the IPO. They probably got pissed off they didn't get a piece of the IPO to begin with, the government. So now they're coming in from the back end. We got AMC, we got Space, we got Newegg, a big mover this week. Edit, which was something we've kind of looked at before. TLT, I wanted to look at the bond yields on the long end today. Pets is back on the list. The Qs, FCX, Baba, Baidu, and XLF. And Baidu, because I want to talk about what happened last year with regard to the stocks when we saw that Ant Financial and Jack Ma were targeted by the Chinese government. And let's see what happened to those stocks after that. And we can kind of glean some insight about maybe what's going to go on with Didi. So Didi, kind of new, but let's kind of skip to that right now. Let's go to Baba. And that didn't work. BABA. There we go. I want to focus on the daily chart. I mean, this is what happened, when we saw this big move. This was, I think, right here was kind of the big move with Ant Financial and the problems. Everything just dropped off. Stock made a great run back, and everybody's like, I don't know. This may be an ongoing situation. I would expect with, who did I have? I had Baba and Baidu. Okay, same thing, kind of look here, this big move down, where there's concerns about what's happening, these big moves, and then consolidation now breaking down towards the lows. Not a lot in the support line right now. Kind of dead money. If you look at this bottom chart, this is the aileron. So what you're looking at on the top here is basically the Commander Series package. It's the series. It combines a lot of different indicators. On the top here is very unique, very powerful. Extremely powerful, because what you have is a multi-time frame, right? So we're looking at 30 and 60 and 240, right? We're looking at all that. We're looking at, kind of click here, right? You see these? Weekly. You can change these up. The only one that you can't change is 30. That stays the same. That's what it's all based on. What we did was we developed a multi-time frame. So you can see when you put in a stock like AMC, okay, let's look across. What do we got? Well, we got nothing on the 30 chart, the 60 chart. You don't have to keep on clicking the charts and see where you are on it. And it shows you, for example, on a daily, AMC is long 19 days. So if we were to click that and you look at the daily and we were to focus in on this, the last one we have is here. We count from here, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 with 19. With the initiation. It's got 19 days long. 19 bars long, I should say. Okay? If you change this to weekly, 1, 2, 3, 4, 5, 6, right? You count this and you add this and you got, what do we got? 6 on the weekly. So what's interesting about this is you see an exact number right there. You don't have to look at the chart. You say, okay, what are we, weekly long? So you can see that very easily. And you see there's nothing going on. What do we say? We got let's go to the 30. Okay, the 30 is blank, right? It's blank right there. See this? Blank? Well, you're in a gray zone right here. You're in a no man's land. No person's that land. No you, they, them, him, he, her land. Right there. You see that? So what's happening right now is this very reflective. It's very, very powerful. This is why people subscribe and love it so much, because it gives you all this information right at your fingertips. Now, you look at DD and say, hey, wait, what's going on? How come nothing's up there? DD's too new. It's just too new. There's not enough information, not enough data. It's only a few days old. So weekly, it's only got 2 weeks. Daily, it's only got, 6 days of trading. Up 4% today. Took a position in this actually yesterday. Hit some support here. Not a lot to go on here. Really looking at just a reversal potential trade on the upside. There's not a lot to look at on time frames here. Going down to 10 minutes, probably the best that I was looking at. There was some decent support right there at $11.20 yesterday. Finished right on the nub right there again yesterday at the close, up 45 cents today. So you got a nice range up to about 11.63 on a short-term 10-minute. And then probably better yet right there is 11.84. So what are we talking about? From 26, talking about a 5-6% trade from where we were on the bottom side yesterday. And I want to go back to 30. I don't know why I went to that. So here's a 30-minute. 30-minute, again, resistance probably in the 65 to 80 zone right here. You're going to above that 11.98, though. You got free sailing to a point, through to about 12s and change. So kind of DD interesting. If we use the same analog that we saw before on some of these other names, what's going on there? AMC, we talked about this. Let me make sure we're all set here. Yeah. So what I was mentioning before was what you get is this part on the upside. You get also the visuals here. Very easy to see, color-coded, makes life easy. Then what you get is the overlays of where this is. And then on top of that, you can enable this study, which is the radar, which gives you a much more granular look at what's happening. Right here was very easy to see that there was a potential to really see a whole drop down to the 43, 47. Now, we saw a reversal yesterday off of a key level here. Just, I would say it was kind of thin. If we draw one of the levels inside of the radar, I mean, look, you got right to that level. See that green level right there? A lot of support. Now, you wouldn't have seen that. That's not really showing up anywhere on the chart, on a daily chart, when you're looking at it just plainly like this. One of the things that's interesting, you see, you have look over here on the left screen. You have a green, right? You have green, then we have blue, then we have red, green, blue, red, green, blue, red, green, everywhere. But wait. Over here it's just blue and red. What's happening? Well, if you click and hover, you'll notice on the bottom there, it talks about the cruise and the stall, 1946. There is a lot of support for a long period of time back to June at this level. This level down here, right there. Well, it's 1946, but I'll get it close. There we go. That level right there has double support. So I'd be a buyer down there. It's a long way from where we are now. There's no question about that. But that's something to consider. Space. This has been holding very nicely at our 43, 44 level. Came down yesterday into it again. Reversed around, came right up to the top. I'll just kind of move our line right up there. Right up to the top at 52 and change. Right now, down a little bit this morning. Richard Branson will be rocketing off into space this weekend, I believe on the 11th. So what is that, Sunday? And if he comes down and does a good job of it, I think it's a pretty good shot that this could break above. A little crazy because it still is a very, very, very speculative play. I'm not sure what's going on here. I don't know what the volume is on this. Let's see if we see it here. Stamps, 4,200 trades. Something's going on with Stamps this morning. I don't know when the last trade was, but we are seeing a major move. 254,000 shares traded in the pre-market on that. This is a quick look at what's trading and what's hot and not. But this has a history of doing some crazy things. We kind of draw this back a bit. This is going to be up pretty good. This is going to be an all-time high, maybe, or close to. Yep, all-time high. We've seen this kind of move before. Crazy stock. I mean, just absolutely out of its mind. So I'm not sure what's going on there. Newegg saw that traditional spike that we've been seeing on some stocks where it's been holding forever at the $10 level. or so, and just started moving up. Great pattern to look at. I mean, just look at this. What do you see? Well, you see nothing. So I'm going to kind of go to the right here if I can. I'm going to get rid of that. I'm going to get rid of all that. It's kind of how the stock was trading for a while. Saw this spike up out of nowhere, on some volume right here, right on 22 million shares, up to about 16, came down, came in, came down. Usually thinly traded, not much going on. Obviously, why it looks so bad is because we got that spike from 10 to 70, currently trading at 46 and change. So interesting looking chart from the perspective. We can see this maybe even on a weekly. I don't know if it's going to show it that well. When you see it just not going anywhere for a while and then all of a sudden spiking up. We had a call at about $12.50, still long. Now, I would have personally taken the profits on this. It's still long. I mean, I would have taken some of the profits way up here if I could have. Any of these kind of halt areas that happened the other day, I would have taken those profits. But we did see a nice yellow initiation, the alert that happened right at about the where is it? 12 bucks, 11.60 level. Something to consider. I mean, nice little trade there, right? Edit, although very volatile. Edit is back into again its level of support. Let's kind of bring that here. You got this range right about there of this nice support of 43.59. Currently trading at 46.99, up a little bit. Did turn around yesterday, bounced off of that. This is one of those CRISPR. It's another one, CRSP, a couple of these. That's some really interesting things are happening with regard to, and you can see when we draw these lines, that means we've talked about these before. We see the aileron, which is not part of the indicator package that we're talking about here. It's an add-on, but very powerful, very usable, and very useful. Overall, what this does is, stamps being bought. Thanks. Hey, who's buying stamps? I find that interesting. Is it going to go private, maybe? That's probably what's happening, I would bet. I don't know who else is. Why are they buying it for that kind of premium? Because the post office could kind of put them out of business and put them back. But with regard to CRISPR, some interesting technology they have there. TLT, again, we saw this is the 20-year long treasury. And when we look at this, kind of trying to get some levels here on a daily. We've been in this uptrend for a while now, all the way from June. This is a nice level of, you can see the bottom here is the momentum. It's the general level. We see it above the zero line. It's kind of like, when it coincides with a level on the top here that's moving up, that's a good sign of things. We saw a bit of a kind of a banger right here. This is a technique that we look at. You could find that if you search that for TriggerCharts, the banger setup. When we start to see that this is overdone to the downside, and we start to see it pick up, and we see that it's supportive off of the bottom here, and then a pickup, and then bang, right there, right here. You got a dual move, right? You got to move above the trajectory of the momentum move. We saw the move above zero, and we see it move above resistance, and you got a green from where we were, and there you go. You got the kind of the entry point. Pets. Let's look here. It's just, this could scream at any given moment. Right now, the momentum is not in its favor. It's something we looked at recently. I said if we get above this 34.69, just can't seem to do it right now, but we'll see. Qs are down a bit today. We saw them down yesterday, hold support pretty well, right about there at the 355, coming down. Thormo Brava. Yeah, private equity. Yep, I told you it's probably private. Interesting. Paying up for it pretty good. Thanks for that information. Appreciate it. Yeah, because I couldn't imagine any public company that would absorb that. I don't know. What do we got here? FCX dropping. This is that trade that's been so great for so long. This materials trade. Look at that. Look at that. I mean, it's frighteningly good. It's $6 to 45. Copper's making a comeback, so pretty good. And when we look at some of the other runners that are going on this morning, let's go to where are we on the movers. Stamps up 63%. Nice. Anything else that looks interesting on here? Novon, Morphic Holdings. That's an interesting one. Yeah, Morph. Let me see something here. Let's see. I think this had a couple of ups. Yeah, a couple of big moves on the up, consolidating down. See, here's what's interesting. There's nothing here. It's up 11% today, so it's probably ticking out. I would venture to see 64s, whereas probably right at the top end, right inside there. Yeah, 64s and change. Kind of just a reversal out of nowhere. A short call, right? You had a nice short call there at 61. came down to 54. Right now it's 64, up $7. Kind of came back yesterday, reversed, and now you'd be out of this call. These kind of very choppy, clearly where you see this kind of move, a 30 to a 90. Something you got to be very careful with. There's going to be probably a short squeeze coming in the future, something to stay away from. So we're going to end it right there. I want to thank everybody for joining us today, and we'll see you again next week. Thanks.